So guys, I don't want anything from you in this video. I don't want you to like, I don't want you to subscribe, I don't want you to comment. Don't do anything. This is an audition from me to you guys. I've started this channel, guys, nearly 3 years ago now. I don't get paid for this. I do it for the love, and I do it because people have never believed in me, and people think that I'm crazy. People think that I'm wasting my money. People think that I'm a gambler, and I want to create a community of like-minded people that I can talk to and have those conversations about how this technology is developing and transforming. So this is basically me selling myself to you. Probably shouldn't sell myself next to a street sign, but this is me selling myself to you guys. And what I'm going to be doing is showing you why this channel is different to any other YouTube crypto channel, because there's hundreds of channels out there. There's probably thousands of channels out there, but I'm going to do something differently compared to every other single channel. It's all about peaks. It's all about troughs. And there's a 4-year business cycle, and we're going to be honing in on the 4-year business cycle, guys. And the one thing that I'm going to be doing different is going to shock you, because at the end of the crypto bull run, I'm going to be planning on riding a new bull market whilst the rest of the crypto market drops 98%. I'm going to be showing you on this chart and demonstrating exactly how you can ride a peak, and instead of riding the trough, ride a new peak. So as part of any market cycle, guys, you all know that you go through peaks, you go through troughs, you go through bull markets, you go through bear markets, you go through a boring phase in the middle, which lasts such a long time that it just completely loses interest of people. And that's the build phase. That's the time to accumulate. And that's what we've been saying on the channel for such a long time. So the markets go through peaks, the markets go through troughs. This is the Wall Street cheat sheet. You can see on the right-hand side here, the peak, point of maximum financial risk, and then the trough. Why do you think that it needs to go up, and why do you think it needs to go down, guys? Because if everything stayed the same, it'd just be a long line in the middle. Nobody would be able to make any gains. Nobody would be able to make any losses. Nobody would be able to take advantage of a market. Liquidity couldn't go into companies. Liquidity couldn't come out of companies. It all works as part of a market cycle, guys. During the market cycles, let's get this up. During the market cycles, you have your expansion period. That's your peak. And then you have your pullback, and that's your trough. And then you have a push up again, which is the expansion, which is another peak. So they go through different parts of the cycle. And during these different parts of the cycle, guys, things are happening. You've got the expansion phase. This is during a time of quantitative easing. What does quantitative easing mean? It's when there's stimulus going into the economy, when there's new money being printed, there's stimulus going into the economy, and it coincides, or it tends to coincide, with presidential elections. A presidential election, why does that matter, guys? Because a new president has to promise the nation to try and get elected that they have to fulfill their promises, and to fulfill their promises, they have to do that with borrowed money because they haven't got their own equity. So it stimulates the economy by putting new money into the economy. That new money goes into the market. Some of that new money goes into crypto. Some of that new money goes into other markets. But basically, guys, it's going into the market. And that's why the prices of stocks go up and up and up. And I'm not going to be talking about too much about that, guys, but it's one big manipulation, because the value of something going up with inflation doesn't do anything other than devalue your currency. So if you had, for instance, $10,000 in your account 5 years ago, and you've held that $10,000, and we had a low interest rate, say you accumulated $300-400 during that period, about 40% of the value of dollars was lost during that period. So you can only buy around $6,000 worth of things. So if you've saved that $10,000 and you can only buy $6,000 worth of things that you could only buy, that you could have bought 4 years ago, then what does that mean, guys? That's a way of stealing from you without it looking like it's being stolen from you. And they do that through money printing. Every time that they print money and put that much money in circulation, it devalues your currency by the amount that's being put into circulation. Sorry, a bit off kilt, a little bit of a rant there, guys. So the markets go through peaks and the markets go through troughs. You've got good news when you're going through expansion. You've got, like I say, stimulus into the economy through quantitative easing. And then you get to a point where you're over leveraged. Everybody's making money. The P&L's all in profit. Everybody's over leveraged, and the market needs to cool off. What goes up must come down. Otherwise, it'd be a straight line. So at this peak here, during the top of the bull market, who's calling the top of the bull market, by the way, guys? Anybody that's calling the top of the bull market is just completely lucky. 10,000 people called what price Bitcoin would be, what price anything would be. You're probably going to get 1 or 2 people that are going to be right, and it's going to be luck and not technical analysis skills, guys. Nobody knows what the market's going to do. You can only take advantage of the market by looking at the time in the cycle. Are you going up? Are you going down? Are you accumulating? How can you take advantage of each time in the market? And this is why I'm going to be doing something different, because during this trough here, I'm going to be reallocating my capital and putting it into things that are going to be running during this trough. So what I'm expecting, guys, is to run the peak, run the peak, run the peak, and then scale out during the peak. When I'm scaling out, guys, and this is another thing that's different, it's going to make me look bearish. If I'm scaling out and taking profits along the way, as long as I'm taking profits, that means I'm banking profits. It means the bull run hasn't been for anything, because this is the bull run that I'm riding to try and change my life, the same as all of you guys. I want to change my life with this bull run. I've positioned myself well. Been doing the YouTube channel for nearly 3 years now. I haven't got pretty much next to nothing from doing that, guys. It's because nobody believed in me. Nobody believed in me, guys. And I wanted to create a community of like-minded people that believe in this technology to push it forward. Things are changing now as we're entering the new bull run. My dad texted me for the first time in about 2 years and asked about Bitcoin. I've got people texting me all the time about Bitcoin. I've got strangers messaging me about Bitcoin. People are interested now because expansion, positive news. Bitcoin could be the reserve currency. Everything's going to go up. Everything's going to go up. You're going to have a super cycle. Don't let them tell you there's going to be a super cycle, because there's never been one before. So what makes it happen? What makes it going to be different this time? Get my words out, guys. So that is the intention, guys. That's the intention. Go through all of these emotions. When you're at euphoria, this is where they're going to tell you there's going to be a super cycle. It's going to continue to go up. You're going to come back down. You're going to pull back. You're going to think this is a higher low, and then bam, complacency, lower high, down into the bear market. So is my plan, guys, to pick the top of the bull market during euphoria? It's definitely not. That's definitely not my plan. I want nearly all of my position out by the time it hits euphoria. I want some in when it hits euphoria, but I want most of my position out during euphoria. But how do I do that, guys? How do I get most of my position out during the course of euphoria? Because it's about scaling out and scaling out and scaling out. When you're scaling out of your position, it doesn't have to be all your position. When you're scaling out of your position, all you're doing is banking some profits along the way to ensure that if you're completely wrong, the market reverses, and it will at some point, that you've banked profits and this bull run hasn't been for nothing. So if you're taking out 5% here, you're taking out 5% here, you're taking out 5% here. As it starts heating up, you start taking 10, 15, 20% out. By the time it hits euphoria, if you've got 20% of your capital in there when it hits euphoria, that 20% will get you insane gains if you play it right and you scale out during the euphoria period. But that's the shortest period. It's the most difficult period to play. So why risk it, guys? I'm not all about that. I want to make money during the crypto bull run. I want to keep the money during the crypto bull run. So I'm not there to keep everything in, wait for euphoria and for it to come out, because I know that that's not going to happen, because I know that when euphoria hits, that's when the hype's going to be there. Probably my emotions are even going to get caught into it. Everybody's going to think it's going to go up. And because I haven't got my structured plan to scale out and scale out and scale out and scale out, which is what I intend to do, guys, then that'll mean that I'll get caught in the hype, and the same as everybody else, I'll lose everything. And it would have been for nothing, guys. All I've done is educated myself over the last 4 years. I've worked on self-development. I've worked on market analysis, technical analysis, macroeconomics, the way that the world works, the way that money works. The more that I understand that, guys, the more it frustrates me, the more that it is a scam. So anyway, back to the video, guys. You'll see that I keep getting these rants and I keep going off kilt. So apologies for that. Let me sell myself to you again. So, right, okay, so we've gone through the Wall Street cheat sheet. We've gone through the peaks. We've gone through the troughs. We've gone through the aim of the game for this channel is to continue this peak into a new peak. Let me show you what I mean. We know that the Bitcoin is built up into 4-year cycles. We know the business cycle is built up into 4-year cycles. We know that during those 4-year cycles, two things happen. You go through times of hardship, you go through times of easing. When you go through times of easing, we've talked about that, that's stimulus into the market. This was so much money printing going on during this period. That created the stimulus in the market, so much money printing going on. So you've got the stimulus in the market, you've got the money printing going on, and then you go through the bear market. You go through the bear market, and this is where the news looks horrible, guys. During the bear market, we've got to go through tightening. That means interest rates go higher, inflation goes up, and that's two ways of them stealing your money. When you've got interest rates that go higher, that means that all of the assets that you're paying interest on, that goes up. So you're paying more to the people that have got the assets, i.e. the rich. And then a double bubble, guys, then you've got inflation to contend with. So you're giving your assets to the rich through the interest rate increase, and then through the inflation, you're paying more for your goods and services. And the money stays the same. Apparently, a dollar's a dollar. Apparently, a pound's a pound. But next year, a pound's going to be less than what a pound was this year. And then in 2 years' time, a pound's going to be worth even less than what it is this year. It's never going to reverse, guys. It's never going to reverse. And that is why Bitcoin is different, guys, because it has got its limited scarcity. It has got its 21 million. You can't go printing more Bitcoin than 21 million. There's only about 1.25 million Bitcoin to be mined. It's the most scarce asset in the world, and it's the most appreciating asset in the world. As fiat currencies lose their value over time by printing more into circulation, Bitcoin gets more expensive over time because it's got the halving built in. Every time it has a halving, that means that each time it costs twice as much energy to consume the same amount of Bitcoin. That means that there's less that are mined over a period of time and over a period of time. So it becomes more scarce and it increases the value because of the energy consumption that's needed to be able to mine that amount of Bitcoin. So it has that built in. It's got that clever mechanism built in, guys, where it goes up in value over time. Still a volatile asset, guys, but it's worth $2 trillion nearly now. So $2 trillion, it's getting a bigger asset, and the bigger it gets, the more diminishing the returns are going to be, the more that it's going to be adopted. Now that the world's adopted it, now that the US has adopted it, probably the rest of the world's going to follow. All governments, all central banks are going to start buying Bitcoin to use it as a reserve and a hedge against fiat currency. Because what happens when you hedge something? If you've got Bitcoin and you've got fiat, as you print more fiat and it becomes less valuable, you've got more Bitcoin and it becomes more valuable, it offsets the fiat. So that's why they're going to be using it as a reserve currency. They tried it with gold, they failed it with gold, and then the US completely messed it up afterwards. So if we can get back to any kind of standard, whether it's the Bitcoin standard preferably or any other kind of standard, where that fiat currency is actually backed by something, then that would be good. That would be good. It'd help guys with national debt as well. They've spent so much on national debt now that all of the money printed goes towards national debt. So what does it mean if you're printing money and putting it towards national debt? It means that all the schools, all the hospitals, all the housing that needs developing, the money's not going into that. It's going into paying debt that they've had to borrow irresponsibly. One, because of the banking crisis, and two, because I'm not going to mention what the second one was. So back to the market cycles, and that was me going off kilt completely again. That's why Bitcoin is better than dollars. That's why Bitcoin is better than pounds. Should you go and buy Bitcoin? I'm not telling you to do anything. I'm not a financial advisor, but this is how I'm expecting to play the market cycles. So what I've got is I've got the Bitcoin market cycles, 4-year cycles built in, and this is the halving. So you see that we've had a recent halving here, and then we can look at when the next halving is going to be to try and estimate when the next halving cycle is going to be. So it's all about blocks. And you can see, looking at the Bitcoin halving clock, we've got 3 years, 18 days, 5 hours, 14 minutes, 50 seconds. And the due date is March the 26th, 2028. So we can go on to there, look for March the 26th, 2028. So we've got the Bitcoin halving built in. That's the next cycle. That's when we know the next cycle is. So does that date mean that that's the date where we're going to be coming out of the one peak and going into the next trough? Definitely doesn't, guys. It definitely doesn't. Go back and you look at the previous Bitcoin cycles, and what you can do is you can measure from the halving to the peak how long it is and estimate it. It's not going to be a given science, guys, but you can accumulate over a period of time and scale your position out higher as time progresses during that period. So how long? Let's measure it. How long? From the previous Bitcoin halving to the peak, that was 79 weeks. This is the weekly chart. Then the last one. Last one was 78 weeks. So you've got 78 weeks, you've got 79 weeks. So if you estimate between 75 and between 80, you're looking at between 75 and between 80, somewhere around, if you go conservative, 75, somewhere around September 2025. If you go at 80, you look at October, November 2025. It coincides with the previous cycles, guys. It coincides with things that happen during market cycles. The more that you understand market cycles, and the more that you learn outside of crypto, the more that you understand that these things here during these periods happen for a reason. This is the trader holiday. What happens during institution and trade holiday? They all go from the holiday, they all sell their positions, they come all the way down here. The market crashes. Why does the market crash? Because their liquidity isn't into the market. They come back from holiday, liquidity starts again. And that's what happens, guys. Then you get end of year sell offs all the time. You get end of year sell offs. This was the end of the crypto market towards November 2021. All sorts of bad news was happening then, guys. Same thing happens. Where have we got? May. You've got April, May down here, guys. Low liquidity in the market. Then you've got trader holiday finishes towards September, October. What happens? You get this massive surge in price afterwards. So you can look inside things, guys, to understand exactly what times of the market is a good time to be buying, exactly what time in the market's a bad time to be buying, what time's good to accumulate, what time's good to distribute. So that's the Bitcoin cycle. When we get to this point here, this is where I want to show you guys. In November 2021, there was all sorts of signs happening here, which were telling us a clue. Let me just clear this up. We got a clue because of this. And in one of my previous videos, I've said there was a couple of other clues, and that was Elon Musk selling his Tesla shares. That was in the news. Jeff Bezos selling us. That was in the news. We put in a high here. And I've talked about why this high was fake, guys, because of money printing. And then we'd got this bearish divergence on a weekly time frame, which has got a higher significance, indicating that this was going to be the end of the cycle. So towards this area, scaling out here, wouldn't be a bad thing. What you're doing with your assets once you're scaling out, guys, this is what I'm going to be doing different on this channel. Because at this point here, November 2021, I want to show you something. Look at the ADA chart. Firstly, how much did Bitcoin drop? Firstly, let's do this. How much did Bitcoin drop from its high to its low? Bitcoin dropped 76%. When Bitcoin dropped 76%, how much does the top altcoin like ADA drop from its top to its bear market low? 93%. So imagine having a portfolio that you'd built over time and then allocated capital, which was life changing to you, and then you'd lost 93% of it. How would you feel? There's lots of horror stories out there about how people do feel. And guys, I'm not a genius. I'm not rich. I'm just trying to make it myself during the course of this bull run, and self-development is the key. Right. So we know that ADA dropped nearly to zero. We know that Bitcoin dropped nearly 80%. During this November 2021 crash, when that market ended, what happened? You had bull markets in other areas. You had surges of price in other areas. Now, let's talk about the surges of prices in other areas and what impact that had and how you can get clues in the market when something's going to diversify out of one asset due to fear. It's all about fear, guys. It's all about indecision. Then move into another strategic asset that can give you an advantage. So let's talk about that on here. Something happened here, and I'm not going to say it, guys. Not going to say it, but there was an invasion there. There was an invasion that happened at this point here. This was April 2022, March, April 2022. So as the market crashed at this point, the market had fear, the market was undecided, and Bitcoin itself dropped 65% on the back of that fear and the back of that indecision. So what happened during that invasion to wheat? We know that the place where is the breadbasket of Europe, that was in a place of state where it was not going to be able to provide grain. It was not going to be able to provide wheat. If it was not going to be able to provide wheat, what would that do to the supply and demand, guys? It'd make the supply go down and it'd make the demand go up. And when the demand goes up and the supply goes down, it makes the price of the asset increase. So as crypto started coming down, you've seen wheat have a bull run, and you're seeing wheat have a surge of 82% to the upside. When crypto was dropping and Cardano and all the other cryptocurrencies were dropping 95, 98%, the opposite happened here on wheat. That increased by that amount. What happened with this? Gas. What happened with gas? Exactly the same thing. We had fears in the world. We had scares in the world. Prices of energy went up. Prices of gas went up. Prices of oil went up. Prices of Bitcoin went down. Prices of stocks went down. And then the bear market, as far as the macro cycle is concerned, started going down. But if you're clever and you look and you think outside of that and you look into other areas, look at this natural gas. How much did natural gas go up? This is exactly the same time as Bitcoin was going down. 169% to the upside. So imagine riding a bull run during a bear market, guys. That's what I'm intending to do on this channel. I'm intending to do it. And people are going to hate me for this because I'm going to be scaling out and I'm going to be a bear and I'm going to be an outcast. I'm going to be a black sheep and I'm going to be outside of everybody else. But I know, guys, whatever the masses do, if you do the opposite, often it works. And I've got a thesis behind doing the opposite, guys. So I've got a lot of belief in this system and I'm going to be doing it in front of you guys. You're going to hold me transparent. And if it is something that you think would be useful for you guys, join me on the journey. Join me on the journey and hold me accountable. Take care of yourself, guys. Thank you very much from the bottom of my heart. I've had nearly 1,000 subscribers during the last few weeks, so the channel's growing really nicely. I hope you're going to be one of the subscribers, and I'll see you guys in the next one.